your stop loss and you always hit your stop loss and then go higher, then you flip your mindset and you look for what happens if you start trading your stop loss. Okay? It's not manipulation, bruv. It's who has the greater brain. That's all right. So that was the last for me. Yes, but Sib, if I contradict Nick, well, he was the one taking the risk from bringing me here. So if you guys need mentorship, if you guys need my if you need my opinion, if you want me to look at your trading setup before you take it or whatever, make you think at least twice or three times about what setup you take, I'm here for you. And you can find me on my YouTube channel. You can find me in Discord. You can find me on my email. It doesn't matter. I love you, family. And whatever you do, make me proud and make money. Okay? Boom.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. Welcome back to another red day in the markets for right now. We've got a pretty nice directional slide since Thursday last week. All-time highs, markets are down about 2.5%. We poked those all-time highs. We have pushed around 2.78% on the SPX. Look, it's Monday. I think the bigger play this week, as far as bigger news and the big market movers, NVIDIA earnings will probably be the biggest market mover this week. Earnings come out after market on Wednesday. We also have core PCE on Friday. Is NVIDIA going to be able to save the market this week? I don't know. I mean, we have highs here, lows here, August levels, all-time highs. I mean, I would imagine earnings are going to be somewhat positive. It's just a matter of how excited the market gets about it. I've sold a lot of premium on NVIDIA, and that's fine. I mean, I wouldn't even take ownership unless this thing's down below like 110 or down below like $100. And that's okay by me. Unlikely we're going to hit a big move like that. There's probably a bunch of chop in here anyway. If it does come down to the 200 moving average, there's probably some buying interest down there. But I think it's going to be a lot of noise this week. But just be prepared for some selling. There's still some range trading in here. There's still some range trading. If things get a little bit uglier, we could have a bit of a flush down by the bears. Still trying to find that bar count that I've been talking about repeatedly for the last month or so. SPX has a big bar count, anything S&P related. S&P, XSP, same thing. That's the micro version of the cash settled index. SPY, RSP is different. This is equal weighted. I think this is a good way to help diversify this year and get a little bit less of the top heavy large market cap. So I'm doing some dollar cost averaging in RSP. ES also has a nice bar count, and this is why I'm hedging on ES and MES. Nasdaq, we've had one of the longest streaks. I think it's the second longest streak in history with how many times and how many days we have closed above the 200 moving average. So starting back here, we have had like 490 bars, and it's still counting. I know that we've tested. So we tested the low, but we have closed above it's a ton of bars. So I think the only time in history that it's been bigger or a longer stretch was like 2016, and it was like a 560, 570 day stretch. I will get that exact number here. Just give me a second. Let me find that bar count. Interesting. Okay, let's see here. Housing affordability, it's crap. 489 bars, now we're 490 today. Yeah, the best streak before was July of 2016, and it didn't end until October of 2018. It was 572 bars above. That's a wild streak. So anyway, it puts it in the same territory as why I'm looking for corrections. Okay. I think what gets a little bit scarier would be this. And again, this isn't to be doom and gloom. This would be scarier to me. This is a 5 period. This is a 5 period yearly chart. 5 period yearly time frame. If you go back to a yearly chart, you'll see that this gets tested more often than it is not, like every couple of years. The last time it was tested, you can see, was the bottom in 2022. Here we are trading through, it's 2025, right? This is the one thing that'd be a little, look at the blue line. So it offers up some pretty solid dynamic support. Yes, that was during COVID, offered support. This was a pullback in 2016 to 2017, offered support. This is a pullback in 2011. That's a long streak. 2011 all the way until like 2015, 2016. Right. So, I mean, it doesn't have to pull back within a couple of years, but what we have seen, especially since 2018, 2016, pulled back in 2018, very close to it, pulled down and hit it in 2020, pulled back and hit it in 2022. Now we're 2+ years stretched away. So we are now 2 years away from that bottom in October 2022. So if things got really nasty, well, if you have cash, this is a good buying opportunity. Previous resistance as well as a yearly support level. You know, I'm looking at this as a flush down to the 200 moving average, maybe some wiggle room in here to dance around. But if things got really nasty, that pullback towards 4,800 would feel absolutely awful, because that would be a pullback of around 22%, and on an index that's going to feel like crap. So could that happen? Sure, maybe. Doubtful. I mean, I'm still pretty optimistic as far as being a cautious bull. I think even a correction and flush down, I think the 200 moving average is a good spot. The 144, the 200 moving average, looking to be directional in there. Looking to see if the market wants to buy the dip. Anything in here, looking to buy the dip. If it breaks that structure, then we're probably still going to have some type of like pullback, cap bounce, big head and shoulders pattern. Otherwise, I think this market just continues to find ways to dance around it here and possibly find a way to break these highs. Or if it rolls over on itself, that's when things get a little bit nastier. Because we don't know. It's like there's still so much time left in, like, what's the Fed going to do? Are they going to cut rates? I mean, no. According to the Fed and the watch tool right now, nothing's going to happen until maybe July of this year. Now this is back to a higher percentage rate cut in June. So this has been jumping around a little bit, but looking like one cut in June and then maybe a cut in December. So now the fudge, dude, back on. So now it looks like 2 cuts again on the table. I mean, this tool is honestly like so stupid to watch because it changes all the time. It was only a couple weeks ago that it was like maybe a July cut and then nothing until sometime in like late 2026. Now it's like, the Fed's going to cut twice this year. Why? I have no idea. Why does it change? I mean, has their stance changed? Did Jerome Powell say something different? Has any Fed member said anything different? It's all data dependent. So we're still going to have to wait and see, like, okay, core PCE. So if you go quarterly, let's see here, index annual change. Here's your core PCE at 2.8. You got the Fed funds rate still sitting here at 4.25 to 4.5. This is what's considered restrictive. So does core PCE go higher? Well, sure. If it goes higher, they're going to raise rates? Probably not. But if we start seeing inflation data ticking up higher, the Fed is backs against the wall. I don't think they can really cut with inflation data pointing higher and trending higher as has been the last 4 or 5 months. So anyway, just saying, just be realistic on what the market, is capable of. Everyone wants to be bullish, and it's been a nice, easy 2-year run since the bottom of 2022. 2025 is obviously getting a little bit dicier. I'm cautiously bullish. I still think there's levels to pick up here on dips. I like the daily 144 and the 200 moving average. It gets a little bit nastier. I still like buy trades into like the 5,500 zone. So my SPX, if it came down to 5,500, I'm still pretty bullish. I'm going to be patient. I'm going to pick my battles and try to time it a little bit better, but that's a pretty severe line in the sand. Would I be hedged on the way down? Yep. And this is why I'm still hedged. And I think this is an important thing to have in your portfolio. I posted these in the Pulver alerts, but I do have some hedges. And so far, they are looking okay. So this is a hedge here. Hedge, hedge, hedge. And so far, the hedges are okay. Up $2,000, up $1,200, up $3,000. That's good. And I'm going to see if those will continue to grow. If price pushes down lower, then my hedges get better. On average, those are trades that set me up for around about a $500 risk to pay out roughly $2,000 in profit. Okay. And I've got about 3 of those in. So if I can walk away with, let's say $6,000 or $7,000 profit, it's not gonna wash away like all the pain. I mean, if we do come down here, I'm just trying to time it a little bit better where I alleviate some of the pain, withstand some of the drawdown, and then I can time myself a little bit of a bullish run. And if I get that timing right, and let's say that I am right technically, then this helps beef up the bottom line. So eventually, when we do get back to all-time highs, or if we get back to all-time highs, then that 6 or 7K is then added back into the bottom line, and then I hit new highs in the portfolio. But again, we're like 3% off the highs, and already people are freaking out. There is so much more ugliness that can happen. And I what I don't know, and maybe the best thing to look at would be just a crazy out of the money hedge that's like dirt cheap. But if the option prices are just so bananas over the next like 30 to 60 days, maybe that's the cheapest way to play a hedge that costs next to nothing but pays a ridiculous amount. If I went to MES here, so this would be a micro futures. And if I want to go, let's say to April 30th or even into May, I'm going to go out 81 days and see like something dirt cheap. So if I buy an out of the money put, it's going to be inexpensive. Okay. The probability is extremely low. But what is this one going to cost me? It's going to cost me $100. Okay. But if I'm out 60 days and we have this market, if this market drops aggressively over, I'd say the next 20 to 30 days, okay, over the next 20 to 30 days, then that $100 risk, let's say $115 risk, could possibly pay me, $500 to $1,000. Okay. Is the probability of that trade paying out high? No, it's actually a very low probability payout, but it's there if I need it. All right. So I think I might just throw that in as a, way out of the money. Cost me $115 max risk, and I'll keep an eye on this one. This is out 81 days. So I'd say realistically over the next like 20 to 30 days, if we have a big flush down, this should offer up a decent amount of profit. So I'm going to throw in about $230 of this one. And that's my max risk. See if I can get filled on this. Okay, so 23 is the buy, max risk $230. All right, just got filled on this one. So $23 got filled at $22.75. Okay, I'm going to throw this in for everyone here. Okay, same fill, $22.75. Okay, this will just take me a second. 907.2. Okay. Wait. All right, almost there. Okay. All right, so that just got filled. I'm going to add this into my tracker. So this is a out of the money hedge. This is MES. All accounts hedge. This is May 16 expiration. 5,000 put, $23 debit. Max risk of around $230. So it's really just a crazy vol play. I mean, if this is going to pay me, then we want to see just aggressive, nasty price action for, I would say if we get like a 5 to 10% move in the next, let's say 30 days, that $230 is probably paying 5 or 10x, which again is just another way to kind of offset some of the pain. Okay, so the calculated risk is my dollar amount. I'm taking 2 contracts there. If I want to be a little bit more delta neutral, I probably should take more contracts, but it is also a low probability trade. So the higher positioning hedges for me is that 0.25% risk when I'm doing like the spread. So I buy a put and I sell a put. That pays me a decent amount, and I'll keep an eye on that. So, all right, so those hedges are in. Let's see what else. But just let me make this really clear. Levels I'm watching. A flush down to the 200 moving average, that would be a checkpoint where I'd be a little bit more of an eager bull. Okay, I like the timing of that. If we find that 200 moving average, I think the market would be interested to buy the dip. So it's that area. All right, if I can highlight this spot, it's right here. Anything between this 200 moving average and this trend line that I have supported from these previous lows, that window to me is essentially looking for a V bottom. If the market gets really excited, it'd be a little bit more frustrating if it comes down and flushes lower, comes back up, comes back down, and then has to like wedge its way out and then grind higher. A V bottom would be a little bit easier to trade, obviously, for the timing, and that's what I'm going to try to position for. If it gets worse, and I just want us to be aware of this, if it gets worse, this is my big area 1. This would be my big area 2. Okay, so is it going to be painful? Yep. Certainly less painful on the way down to 1 in a bounce. But if it came all the way down to 2 in a bounce, if we had a 20% correction, we're gonna hear bear market territory. We're gonna hear that we're in a bear market. Well, by the time you hear about it, it might already be there. So I mean, if I could buy something at a 20% discount index wise, that means I've got about a 30% up. Right? If we came down to this level, get back to these highs again, that's a 32% gain. Sign me up for that. Because if we go from 20% to 30%, 30% from 40%, I'll still just, again, try to survive the best I can. And eventually, when we come back to all-time highs, if it takes whatever, a year, 2, 3, that's still just positioning for the future, which is good. Wealth can be made if you are, looking out more than a day. If you look out on a 5 or 10 year horizon, it's pretty simple to stay bullish oriented. But it's not going to come without pain. And we're about to see what this market's made of. But I still think the market is grinding. It's going to grind. If it rolls over, we just hope there's a bottom to buy. Corporate profits are still pretty good. Margins are high. Everyone's about this AI stuff. CapEx spending has been excessive. You could argue excessive, but you got to wonder if that is going to allow big tech to lead the way and I don't know, like make room for this infrastructure, even if it comes at short-term pain with layoffs and the markets have a reality check. Real economy versus Wall Street economy, very different, you know. So anyway, all right, let's keep going. So top down, I'm going to take a look at XSP trading at 600. I'm looking at building in a buffer right here. XSP. So let me look at like in April, that's 52 days out. If I do a buffer here for a profit trap. Okay. Is it any cheaper if I do that? A little bit cheaper, not too much though. So one strike out of the money for a little profit trap. Let me take a look at my levels if they've calmed down. We've got, this is a little bit tighter. This is about 20 cents wide. That's not bad. I was looking at SPX earlier, was a little wonky. This might be a little bit better for that monthly expiration. It's 52 days out. Now the question is, where do I want this XSP to line up? If I looked at a 10 delta, should be around like 550. That's 570. I still like the 550 area. That's not bad. 550 by okay, let's go by 550 by 30. Okay, that's a little bit better. All right, I'm going to take this trade here. Pull in 79 cents. See if I can keep it above. Let's go 45 to 25. All right, I'm going to take this trade. All right, so I got a profit trap. Got some income, 545, and see if I can get filled for like 60 to 65 cents. I'm going to try 65 cents here. Survey says 65 not filling, 64, 63. I should be able to pull in over 60 cents here. 63, 62. All right, 63 cents just got filled. Good. All right, so I'm going in there. All right, this is a trade on XSP. And a little income trade. Let's get this all filled, and I'll talk through the trade here in just a second. Okay, got filled there. 7634. Nice thing is it's defined risk. 9072. Very good. Okay. Good. All right. So that trade is in XSP. So that's a April 17 expiration. Buy the 598 put, sell the 597 put, and then the 545 put, and the 525 put. So pulled in 63 cents credit. So the way that trade works is got about a 94% chance of profit. Max profit would be a profit trap plus the credit. So $163 a contract would be my max profit. I'm risking 1837 with a low probability. I mean, there's no assignment risk. It's cash settled, but buying power only ties up about $950. So I'm willing to accept the risk. The odds of this thing coming down and closing below 545 would be 545 is here. Okay. So are we going to close below this in the next 40 days? To me, I say doubtful. So I still get 64 cents credit here. And if I'm right and we stay below this level, so I'm putting in a bear trap right here. So there's a $100 bonus and I still get my 64 cents. So if we're basically below current price, okay, but above this area right here, this is my profit zone. So I'll make this just a big box. So my profit is right there. This whole area is profit. Okay. So if we're higher, I get paid. If we're sideways, I get paid. If we're down, I get paid. If we're down a little bit, I get paid. If we're down a decent amount, I get paid. We'd have to have a pretty ugly correction where top to bottom, 545, we'd have to be down 11% in the index in the next 45 days. Anything's possible, but I think dynamically, as long as we find some support here at the 144, support here at the 200, if we have like a nasty, OPEX cycle like we did in February to March in 2020. I mean, I don't know. You've probably seen the news. There's talking about a new COVID virus coming out of China. It's like, is even real news? I have no idea. But I'm pretty sure that if there was something like that, the market nor the world will react the same way. It'll be very different than what we saw back in 2020. Just my experience. I think everyone was extremely skeptical on how it all played out. The whole world, governments. I don't know if the world has like another stimulus bazooka, but we know that's crazy inflationary. If we toss another $6 trillion at potential COVID virus again, so I don't think the world's going to react the same way. In fact, it's probably going to feel a little bit like The Boy Who Cried Wolf. So anyway, we'll see. I don't think that's enough to be the catalyst. 2020 was look, COVID was a weird catalyst. 2020 was already set up to be a bearish year as it was, but clearly that changed. So all right, I've got a trade in here. I'm going to add an update. Okay. So that's one trade on XSP. I may end up looking at, let's see here, QQQ. Same type of thing. If I can get Qs in like the 450 zone, I might look at a trade here on QQQ. So go out to a similar expiration, 52 days out to April 17, put in a profit trap right here, and then go out to hopefully an appropriate delta. I want to see if I can get something in the 450 zone. I mean, that's so far below that 200 moving average. I would love this trade actually. 450 by 430 by 420. I'm going to take this trade here too. Okay, I'm going to go after another little income trade. There's a dollar profit trap there, which is fine. 450 by 420. Take this trade hopefully for 70 cents. Actually, I'll go a little bit less buying power. 45 cents. Let's go up one strike. All right, 455 by 435 reduces the buying power a little bit, but still pulling 55 cents, hopefully. $55 not filling, 54. As long as I get over 50 cents, I still like this trade. It's got filled at 53 cents. Okay. Going after another round of trades here. $53, $52. Come on. $51. $51, no problem. Okay, I'm not taking less than 50 cents on this trade. 51 got filled, good. Okay, almost there. Okay, another trade. That is April 17 expiration. Buy the 520 put. Sell the 519 put. Sell the 455 put. And buy the 435 put. Pulling in 50 cents credit. Okay, trades in. All right, so new trade on XSP, new trade on QQQ. I'll get that added into Pulver alerts. Let me get some questions. Take a look at some currency strength. We'll go top down here. Last week, risk off trading in currencies, Japanese yen, Swiss, and dollar. Today, a little bit choppier, but the Japanese yen coming back to baseline. So we had an interesting start for the day, but getting back more like risk off. Speaking of, let me go 6J for Japanese yen. Creeping up towards some highs. My Japanese yen futures trade is looking pretty good. Let's go here. Up about $3,400 on Japanese yen futures. FXY is up around $1,400. So my JPY plays are doing okay. Got about 34 and 14. So I'm up about $4,800 on Japanese yen plays right now. And I'll just let them continue to do their thing. Go back to SPX. 225 still trading for 250. I mean, geez, a Pete's, man. This thing's taking all freaking day. Okay, let's go top down. So we good on the buffers here. Major levels. So between your 144 200 moving average, if it gets a little bit nastier with volatility, potentially down into like the 5,500 zone, I still like that as my area 1 to bounce. Okay, so that's area 1. I'm looking to either one, trade a bunch of income trades like I'm doing here, income trades this way where I get a lot of forgiveness, or obviously like if I can time it, bull call spreads, credit spreads, debit spreads, even considering like a fancy ones like a back call ratio spread, which means I basically have unlimited profit potential. I just have a little bit of a dead zone, but like at that timing, I feel like the market could take off in a pretty big way. So if I'm going to get aggressive, it'd probably be that area with some call options that are reasonable. But spreads are like way easier, because if I just put a line in the sand and I said, look, I think the market's putting in a low at 5,500. If for the rest of the year it does that, it's full profit, full profit, full profit. I can just do that over, if I did that on like 4 to 6 months of expirations, those would all pay. So if I took a, 0.5% risk in each one over the course of 4 to 6 months, I could maybe beef my bottom line by, 2+%. I got to be right, but I feel like there'd be a, timing that'd be necessary. If we get a decent enough pullback, I'd be happy to see like a double-digit correction. Double-digit correction to me is probably a good opportunity to time this market to see if we can get back and revisit highs. I don't know how, I don't know what. I mean, this could be like the fastest, weirdest, we're down 10%, all of a sudden we're back up 5-10% net in 6 months. Who knows? Market cycles are going to just happen faster. I think that's the scary part about the downside, is we can have like this nasty flush. If I timed it all right with my hedges, those will be fine. So a lot of bracing for impact. Don't be silly and think that the market just it has to go up. It's like, look, I could be dead wrong, and we could come down into this yearly 5 period, and all of a sudden, I'm looking at a decent level at 5,500, but the reality is the market's like, man, we're going to retest 5,000. We're going to retest 4,900. Well, that's a lot more pain ahead. I don't know if that's going to be the case. Obviously, there's good support. There's good support here. There's good support here. Dynamically, there's good support here. This would be a really ugly correction, but if I had a 20% discount, it is great support. We had a 20+% correction in 2022. The market ripped up 70+% in 2 years. So a little bit of patience and a little bit of timing could certainly pay huge, huge gains. All right, that's where we're at. Let's go. I think equal weighted, like I mentioned. I am looking at equal weighted RSP and as well equal weighted QQQE. I mean, we're getting some pullbacks, which is good. I've still got some dollar cost average levels in. If they get uglier, I bought in here at 177. I do have a pending order again at 170. If there's a follow through, let's say we go high, low, lower, high, lower, low, 165, I might actually adjust this from a 170 to 165 and just time this. I'm going to look at a symmetry play here instead. So if I go top to bottom, let me delete these lines. Let's go top to bottom. So something like that. And we form another lower high to lower low push. That's 160. I mean, 170 is right there. If we flush lower, I could look at like a D extension or something on a fib, probably in the 165s. But I still like buying this thing. I don't know. If you want to eliminate some of the volatility in the portfolio, I think equal weight's a good way to do it. This market cap high concentration stuff is part of the reason it kind of feels like the house of cards right now. Futures, hedging is important. I'm hedged. NDX, same thing. A lot of dynamic support. Just talking about it. Gets scary if it's way worse, but I think this 144 to 200 moving average, it would feel awful to have a 9 to 10% flush, but I think it's something the market's probably healthier for if we get it. The Dow, same thing. We come down to the 200. This is another one I'm probably looking at. Yeah, I think I'm just going to pick up some dollar cost averaging. So a lot of chart alarms, checking those levels. Russell, this is why I haven't been crazy gung-ho on the Russell. I think there's still pretty strong support here. I just don't love that so many companies in the Russell are unprofitable. I'd rather buy IWI, to be honest. Come back into this area, put some dollar cost average levels in. So anything in like the 225 or less, I like IWI. This one has actually performed a little bit better. I'm looking for a range trade if we get it. Let's say we cap this high and maybe come back down to equal lows. Anything around like $80. Might not be all that exciting, but to put in an allocation here around, let's say $79, we get back to the highs. That's an 8% move. For an index, that's pretty decent, pretty respectable. VIX 1-day versus VIX 30-day. What did I say last week? Okay. You are going to want to see volatility start to fade from here, because we are only one ugly move away from having another outlier like we did August 5th and December 18th of last year. Okay. We don't go from like 10 to 60, but we do go from 10 to 20, and then from 20 to 30 or 20 to 40. That's when things get really ugly. So if this is a spot where volatility is a little bit contained, okay, fine. If it gets a little nastier, then sure, we might be having a conversation in the next week or two that perhaps volatility did make another crazy market move. Like this would be a Volmageddon all over again, just like it was here, just like it was here. So I don't know, just be careful. This market might do some really stupid stuff. If that is the case, if we have a big spike on the VIX, by the way, if the VIX spikes up to like 30 plus, number one, I'm selling a ton of premium. Number two, I'm throwing in ownership of SVXY. So it's a nice way to play. I mean, percentage wise, that was a nice little gain of just going long SVXY. That was up, 25%. So it's not perfect, but if we spike down into like the low 40s, I'm going to scoop up some SVXY. Dollar index, we were coming down to my 106 or 105.50 zone. That's where I'm looking at for some support. Oil, I'm staying out of oil right now, which I'm kind of happy that I am, even though price is obviously very indecisive here in the middle. Could we have a low and high? Yes, no, maybe. We'll find out. Natural gas, big gap lower today. I didn't roll this. I kept it for the April expiration. That's fine. But I'll keep an eye on natural gas. Gold, lots of wicks, but actually today wicked higher again. So we hit another all-time high in gold. It didn't close above it, obviously. I think gold is going to be fighting the good fight. I don't know if we're going to really do much to take down gold unless there's like a heavy profit taking, but there's so much geopolitical tension out there. There's so much concern, uncertainty. And not everyone is just jumping into Bitcoin. Not everyone is obviously dumping money into the dollar. If there's safe haven flows and there's inflation concerns, central banks are also hoarding and trying to load up on gold. So what does that mean? Gold probably stays bid. A pullback looks good. A pullback, it looks good. Without it, I think we just stay bid. The weird part about gold would be if we don't pull back at all and we just start talking like, is gold in a bubble? But to get to a bubble and to actually have like headline news show gold's in a bubble, I mean, who knows what that price could be? We could be at $3,500 an ounce. We could be at $4,000 an ounce. Who knows? So, I mean, I'm not shorting gold. I'm just waiting to see if we have any technical dips or levels to pull back to, and I'll buy some more gold. If we just keep grinding higher and all of a sudden it becomes very much like a capitulation move, then maybe I'll start looking at moving some stop losses. Silver, pulling back a little bit. That's annoying. Bitcoin, pulling back, staying somewhat resilient. MicroStrategy down to 282. Holy bejesus. All right, let me check something really quickly here. MicroStrategy. The good thing is my where's it at? MicroStrategy right here. 375, 310 by 240. Okay. So my 240 put is now up $1,000. Let me see. I bought this for 1050 and right now it's trading for 21. I mean, I can lower my cost basis, recollar this thing. My covered call is up around $2,500. Let me see. I got into this collar. What was it closing for? 1310 debit. So I think individually. So the nice thing is I can lower my cost by another $10 with the put. I don't want to be super cute. All right, I'm gonna have to write this down. This is gonna be a big to-do for me today on MicroStrategy. MSTR long put, and they'll adjust my collar position. Because my break even's 269. If I take another $10 off that, my break even goes down to 259 or so. And then I recollar this thing. I might even tighten up the call side. There's room to drop the 250. There's room to drop the 200. Like this thing could get super ugly. It's 2 to 3 times the leverage of Bitcoin. So if Bitcoin does not find a support level around 91, I didn't draw that very well, but you get the idea. If Bitcoin does not find support at 91, there is certainly room to drop into like 80. My concern on a stock like MicroStrategy is that it is trading like such a leverage proxy to Bitcoin that we could be talking MicroStrategy is down to $200. So I need to find every bit of my option trade to protect that, which I can. I mean, I think I can still flip this into some profit. But if all this is a high, low, lower high, lower low, well, that 240 level is fine. I mean, but do I want to get too cute and fancy with it? Not necessarily. So I think what might be in my best interest right now would be to close out my put, consider closing out my call. What did I pull in on that call? So I pulled in $60 on the call, and right now it's trading for like 35. So I pull a little bit out of that. I can turn the collar into a positive trade. It's going to throw my break evens off a little bit. I'm going to have to do some recalculating, which is not fun, but I'll do the math. I'm still getting paid on the put and the call. That's good. But this is going to be an adjustment. So I'll save that for like off air. But I think on the accounts that I have that own MicroStrategy, I've got to turn this into an update. So, all right, that's that. I'll go for a couple more minutes. And I'm going to wrap things up here. Coinbase, son of a biscuit. Coinbase is also feeling some pain here. I've got some income trades down into the 150s, 160s. Man, I mean, it's like the correlation of Bitcoin. It's like, look at how fast money is leaving. Like MicroStrategy, dump. Coinbase, dump. Bitcoin's like, it's hanging in there. IBIT, it's hanging in there. So your peripherals are just getting smoked right now. Is there some support? I mean, you'd hope so. I hope so. Ethereum still not doing anything great. Copper, pretty nice pullback on copper. I still like the income trade. Still like China still having some lift. DAX, a couple days to the downside. FTSE, same thing. Fez is a way to play the DAX. Argentina, fake out at the highs, looking for pullbacks. China, poke the highs in September, pulling back a little bit. Brazil down slightly. Mags, this is probably a bad sign for Mag 7. NVIDIA is going to be a big deal this week to either save this or we're putting more pressure on Mag 7. Look, there's going to be a lot of pain. If Mag 7 is going to get worse for wear and fall into like the 144, the 200 moving average, if you are in the SPY or the Qs, it is such high concentration in those Mag 7s, it's going to pull the entire market down. Now, this is the broadening out that I talked about. The market can broaden out even in a bear correction because everyone's going to be forced to go elsewhere. Rather than putting money into momentum and growth, people are going to go into defensives. People are going to go into less volatility. You'll probably see some reaction in bonds, perhaps. But this is going to be a major spot to watch this week. If Mags, because of NVIDIA earnings this week, is back up, okay, fine. If we are pushing lower, then brace for some pain ahead. Okay, Apple took out the earnings high. That's interesting. Amazon still sliding a little bit lower. Okay, fine. Google, dollar cost averaging there. Meta's had a nice pullback. This is a nice little expiration for this Friday. That's a broken wing that's going to pay me like $50 contract with a profit trap. Profit trap's probably not going to get filled. Netflix also did what I wanted. I closed that one for profit. It was a dollar credit. I closed out for like 10 cents. It was a $1.15 credit actually. So I closed that for profit. That one's done. Microsoft, some income trades on this one. NVIDIA, we've got some earnings on Wednesday after market. Tesla down to 329, revisiting this recent low. Tesla probably just has to find time to base. I wouldn't be surprised if we base in like the 280s to 250 zone. It might feel like crap to base in Tesla that far lower, but just hit profit on SPX. Good. About F in time. Only took hour and a half. So that was $1.80. Okay, just have to do a quick update here. Okay, I'm going to look at another trade right here for SPX. Let's go today. Move my strikes 60, 40. Let's check the numbers here. 60, 40. Oops, I don't love that spot. Keep it mechanical. 60, 40, 10 wide. 59, 55, 10 wide, $1.75. Take another trade here. Okay. All right, hang on a second. Check it again. 60, 35, 45, and 59, 50, and 40. I'm trying to get $1.25 out of this. $1.30 not filling. $1.25. Let's go. $1.25. All right. Throwing in a little trade. $60.35 call, $60.45 call, $59.50 put, $59.40 put. Okay, add that in. See if I can turn this into a nice little profit today. So I'm going to try to turn this in here. 1, 2, 3, 4. Close. 25. Okay. I'll keep an eye on that one today. All right. Couple things. Let's keep going. Some of the top down, we did gold, oil, silver, Bitcoin, some of the international markets, Mag 7, Berkshire. Let's switch back to this chart here. Holy crap, man. Everyone's loving Berkshire Hathaway. Why? Because Warren Buffett has one of the biggest stock, or one of the stock sells. He was a net seller of stocks last Q3. Also Q4, he has one of the biggest cash stockpiles, and somehow this market's benefiting. Also, they have positive earnings. So Berkshire, that's a pretty big rip, man. 480 to 497. That's a pretty big jump on Berkshire. Probably more so than what the market would have expected. I would have expected a lesser move. Still, ratio spreads looking good for March. Glad I'm in that trade. Here's some bond action. We're breaking TLT's looking good for a full winter. Got some exposure there as well. TLT. Just reminds me of an AC/DC song. Up around $7,600 in TLT. My call side is 92. So if I'm selling the 92, this is out to April. If we're greater than 92, which is this chart alone, that's 91. If we get greater than 91, 92, I might just accept the trade as is. So a 65 by 91 gives me a $26 credit, and my debit is around 21.32. Oops. So 26 minus 21.32. I get 468 a contract. I'm in for 4 contracts. That's 1872. That's a good little play. That's about a 1% position on bonds. I don't know if I'm going to do too much more than that outside of if it's like, crazy in the money or at the money, then I might look at a roll to go out to like May. I don't know if I get the expirations that I want in TLT. I go to May 16th, May 30th. So that's probably the window if I'm going to roll it. I would consider rolling maybe by 30 to 45 days. That's about it. All right, let me get this one back to SPX here. Center price around 6,000s. Trade of SPX. 60.35. 60.35. Okay, so I'm going to set a chart alarm down here at 60.35. That's my bear call spread level. That'd be above today's high. Not saying we can't get there, but hopefully we don't. So I'm going to try to take as much profit of this as I can. Then at the downside, 59.50. We have to have some fresh lows on the day. So another chart alarm there. Okay, keep an eye on this one. All right, I think that's about it for me. Top down wise, I think we're good. Mag 7 wise, stocks, bonds are up. Yields dropping. It's kind of nice to see for the first time in a while. I think it's still going to be somewhat sticky, so not like we're like in the home stretch. Yields are going down. That's good. Hopefully that reflects in our mortgage rates, anything borrowing, financing, refi, whatever. 10-year yields, everyone should be encouraging this one to go lower. What's interesting though is like going lower and then watching the stock market sell off. That's not really great either, right? So we'll see. I mean, I don't mind a lower yield, that's for sure. But if it comes to the pain ahead of, I could see us getting down to like the 4.1, maybe 4%. I mean, I don't think we're coming back down to this level here. Unless things get really ugly out there, I don't know if we're coming back down to like 3.6. So hopefully we're not going higher. Maybe it's just a range. Who knows? But there is a lot of potential movement ahead. I think as long as we keep looking at TLT, IEF, SHY going higher, then we should know that bonds go up, yields go down. That direction's a good thing. That's why I'm long TLT. What else? Futures wise, we're good. Watch the dollar. Let me take a look at some spreads. I mean, spreads are still pretty tight. This is high yield bonds. This is AAA, triple B, triple C. Spreads are still pretty tight, which is encouraging. China wise, BABA down a lot, which I'm glad that I took profit. I still missed out a little bit. I mean, that was another $18 a share. I closed out right around that 126 handle. We got up to 144, so I obviously missed a little bit, but timing wise, it was, I'd say, good enough. I still had like a 45% return there. Baidu pulling back. This is fine. I've got the collar trade in. FXY pulling back. JD, I didn't roll it. I've got this. I need this to stay above $39 by this week. So this is one that could get called away for profit. I'll set a chart alarm down here at $39. So $39 covered call. If it gets called away, I'm going to make I don't know, close to like $600 or $700 per account on JD.com if it stays above 39. If it doesn't, I'll roll it. There's earnings next week. If earnings are positive, cool. If our earnings are negative, I'll have a collar trade on so I can have some protection. SCHD, SCHG, these are two other like allocators. If you don't want to trade SPY or trade QQQ, these are dirt cheap, and they're also a really good representation of like the broader market. So RSP, look, if you want less volatility, here's what I'll say. You want less volatility in your portfolio, RSP, QQQE, SCHD, and SCHG. Those are good ways to play some volatility. IWY and IWX, those are small cap diversification. but also takes away a little bit of the pain from having 2,000 companies having about 70% that make $0. So it's a diversified Russell take. I'm a big fan of dollar cost averaging into all of these. So if I could put in 1,000, 1,000, 1,000, I mean, I would do that. I don't know which one's going to outperform. I don't really care. But I think this would help eliminate some of the excessive volatility that we might experience in the markets this year, right? If the VIX spikes up to 30, 40, 50 again, if we see a 10 to 15 to 20% correction, you're going to feel that way more so in the SPY, the Qs, market cap weighted indexes, futures, but equal weight, spread it out. Not one stock has as much clout and as much emphasis as like, what we've seen with Apple, Nvidia, Microsoft, Google, Netflix. I mean, all the Mag 7s have just played way too much concentration in the market cap. So this is a way to diversify and keep that volatility a little bit lower. Now returns are going to be, the same. It's like, interesting fact, market cap weighted versus equal weighted performance. Actually, I don't know if you know this, but an equal weighted portfolio has actually outperformed in the long run over like 40 years. Not by much, but it still outperforms, and the ups and downs are just more steady. The reason that it's like people get excited about the market cap weighted, like the SPY and the Qs, is because they have years that are 20, 25, 30% upside, and everyone loves that. And then the equal weights are left behind at like, 5, 6, 7% gains. But if you're in an environment where the market is like, who knows, is it risk on, risk off? It's all sorts of drama and all sorts of like head spinning volatility. Take away some of that volatility by spreading out some of that risk into things that aren't nearly as volatile and as sensitive. So that's what I like. All right. That being said, I'm going to let you go for today. Thanks, everybody. Thanks, A1. I'll be back at it tomorrow. All right, bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.